Hi, good afternoon, everyone. I'll give everyone a chance to join, and then we'll get started in momentarily. All right. As people are joining, I'll just do a quick intro here. Good afternoon. My name is Kara Highfill. I'm with the Illinois Restaurant Association. I'd like to thank everyone for joining, especially our panelists. Today's topic of this webinar is valuable tips for preparing your taxes. During today's webinar, we'll hear from Apple Growth Partners and Vaughn Hospitality Group. Both of these presenters, Kristen and Dirk, are valued members of the IRA and experts in their field. So we appreciate having them today. We're going to learn a lot. So during today's webinar, I want to remind everyone that it will be broadcast in English, Spanish, and Mandarin Chinese. To listen to these different interpretations, use the button at the bottom in your toolbar. The webinar is being presented today from us here at the Illinois Restaurant Association in conjunction with the Cook County Small Business Source. The Cook County Small Business Source was established initially to help businesses emerge from COVID-19 intact and better positioned for growth. Directly, the Cook County Business Source does a lot of things, but they ensure one-on-one support, a lot of community resources, no-cost business advising, events, and webinars such as these. There's a lot of resources there. And if you haven't already done so, if you would like one-on-one business advising, go to cookcountysmallbiz.org. It's free and super easy to sign up, cookcountysmallbiz.org. I would also add that illinoisrestaurants.org is a good resource for everyone. You can sign up for our newsletters and anything that you need from a restaurant perspective. All of the contact info from our presenters today, as well as this entire slide deck and this recording, will be sent to everyone who attends. It will also be put on the illinoisrestaurants.org website. I'd also like to remind everyone before we begin that myself here at the IRA and all of our staff remain committed to helping small businesses, especially the hospitality industry. It's been a tough few years, but we're working day in and day out to ensure that we're recovering. We offer a lot of services, assistance, guiding events, and even if you're not a member, we are happy to assist you in any questions you may have. We also offer pro bono legal services and valuable webinars such as these. Before I begin, there is a Q&A option in the bottom part of your toolbar there of this Zoom. So if you have any questions, type it into the Q&A section and I will answer them at the end as they come up, and we'll do our best to get to all of them. If you particularly like a question or someone already asked that question that you wanted to answer, then just give that other question a thumbs up. So then we'll know to prioritize which ones we really need to get to. Now, without further ado, we're going to get started. We have our panelists today. We have Dirk Albeck. He's a CPA and he's a principal at Apple Growth Partners. We also have Kristen Vaughn, who's the owner at Vaughn Hospitality Group. First, we will have Kristen go. So Kristen, if you're ready, take it away.
Okay. Hi, I'm Kristen Vaughn. I'm a co-owner, as she said, of 5 restaurants in Chicago. 4 are Irish pubs and 1 is on the Riverwalk. I'll list them just so you're aware. It's Emerald, Corcoran's, there's 2 Vaughn's pubs, and then Chicago Brew House is on the Riverwalk. I've been in business for about 30 years, which is hard to say because I used to always say 20, but I'm getting older. I'm in our restaurant. I'm basically in our restaurants. I'm in charge of the POS systems. I do all of the programming. I handle all the HR and the payroll, and I do all the accounting and the tax reporting. And we've been audited by the IRS at least 3 times, and every time it's been no change audit. So it's just been a lot of time, but in the end, we've been found to be doing it the way they wanted it. Yes, this slide. So in preparing for taxes, it's important that you use your key financial systems to your advantage. So we use Toast as our point of sale system. But if you use a cash register, the manual cash registers, it's still important that you track in some system, Excel or whatever, your daily sales, your weekly sales. And some of the new systems, the point of sale systems you can use to capture time and attendance as well. And even some of them, they can do your payroll as well. So it's all in one. We use Toast, we used to use Aloha, but there are other options such as Clover and Square. And nowadays the systems are way less expensive than they used to be. So if you're not using a point of sale system, I would encourage you to look into it. The next system that's important for taxes is your payroll system. Many providers can do your payroll, and some will link directly to your point of sale system. We use ADP, but we have used Paylocity, and Toast also offers payroll, and there's also Paychex. These systems ensure that you report your time and attendance wages timely, and that the tax payments are done, and that your reporting is in compliance with the regulations. The next system is your bookkeeping system. You must keep your books timely and do it regularly and not just wait to the end of the year. We use QuickBooks Desktop, but some POS systems also do this for you. Many of them link to your accounting software, so you can pull in the information from your point of sale system right into your accounting software. We use FinTech to import our alcohol purchases, and this helps us not only with ease of payment, but ease of reporting. And we also have some of our larger suppliers, such as US Foods. They give us a weekly feed of what we've ordered, and we import that right into our accounting software. And this saves us time in paying the bills, and it assists in making sure that we're tracking everything properly. It's extremely important that you file and pay your monthly sales tax returns on time, and that you reconcile your accounting system to your bank statements monthly. Keep up with the books is one of the most important parts of being ready for tax season. Additionally, you need to identify a CPA as early as possible. Staff shortages mean that they may not be able to jump to you when you are ready, so you need to set it up ahead of time. And you should set up a date with your CPA for when you're going to provide them with your information, so that they're ready for you, and then you know what your deadline is for being ready for them. Next slide. So before providing any information to your accountants, you need to ensure that all your revenue is reported. Your point of sale system needs to tie to your deposits that you've made. We do this weekly, some people do it daily, but it needs to be done routinely. Your monthly sales tax returns, they need to tie to your point of sale system as well as your accounting software. You should reconcile that monthly, as well as all your bank accounts need to be reconciled between your accounting software and your bank statements. Another important thing to identify is any other income that might need to be reported, such as grants, vendor rebates, ERTC, etc. Any underreporting is where you get in trouble. So you need to make sure that you have identified and report all your income. Employee and vendor payments need to be recorded. If you use a payroll processor, you can use the wage reports, the W-2s, the W-2-3 summary. That's going to be needed for your tax prep. And then you need to make sure that you issue 1099s. Anyone you pay over $600 needs to be issued a 1099. And this is if you have more than one location, it's over 600 between the locations. So if you pay 300 at one and 300 at another, you need to issue a 1099 both locations in order to be compliant. And we use Tax 1099. It's an online software, and it's very easy to use, and it's also very inexpensive. So doing 1099s doesn't have to be difficult or expensive. Taking inventory for your tax prep is important. We take inventory once a week, but if you at least need to do it at the end of the year, because you need to have a dollar value for your inventory for food, beverage, and supplies. This is important. It should be done year end with the totals based on both the, based on both value and item count. And then documenting your expenses, accrual versus cash. It's really important that you accrue for anything that you want to make sure you get the deduction for in 22. If you're paying out bonuses, you need to look at your gift certificate liability and make sure you make an adjustment based on how many gift certificates you have out. Anything you need, you can take an expense for by accruing. Make sure you identify it and make the accrual. Next slide. Reporting of declared tips. If you have employees that get tips, you need to fill out the form 8027. It's filled out, this form must be completed annually. It's a paper form. You only have to file electronically if you're filling out more than 250, and the paper form is very simple. It's required if you pay tips to any employee. This form is used to ensure that you're paying a minimum of, you're declaring a minimum 8% of sales as declared tips, and that all your credit cards are being reported. With every payroll, it's best to kind of compare to make sure that your tipped employees are making at least minimum wage, and that with their tips, and if they aren't, you pay them additional. And that minimum wage, you'll make sure that when you're doing your payroll, you need to make sure that all your credit card tips are also declared. You just need to make sure that everything that they're getting is declared. The benefit of making sure that everyone declares all the tips that they earn is when you fill out the form 8846, which is FICA tip credit for reported declared tips. This is a great benefit for restaurant owners. You get to have a credit on the wage differential from the federal minimum wage of $5.15 to whatever the employee's gross wage is. The preparation is pretty simple. Many payroll processors will provide you with a report, but I would also encourage you to double check. We do a download of the detail of how much we pay to our employees, and the information that you need to use is the employee's name, their total hours, their gross wage, and their declared tip. And you can use this information to ensure that you maximize your FICA tip credit that you're allowed to get. And this can be very beneficial because the credit is as the same as if you paid a tax on your personal return for whatever your liability might happen to be. That's all that I have. Dirk, are you ready to take over?
Yes, and what I'm going to do today, my name is Dirk Albeck. I'm principal with Apple Growth Partners. And we work with a variety of restaurants, from small single unit restaurants all the way up to multi-unit, and franchisors, franchisees, all types of concepts from fine dining to fast casual. And what I really try to do when I work with restaurant clients is do everything Kristen was talking about, make sure to work and get those systems down so the taxes and accounting go smoothly, and then we can concentrate on going beyond the numbers and looking at ratios and looking at benchmarking and making using technology to its fullest to make all those processes smooth. I'm going to touch on 5 different areas today, and we can go. You can go to the next slide, my first slide. And what I call it audit exposure, I think it's just good practices is another way to say it. The first thing is I know when the sales tax auditor comes out, and if you get a sales tax audit, first thing they do is they look to see what the gross sales are recorded on the sales tax return compared to what the gross receipts are shown on the tax return. And those should agree. And so it just makes sense because everything starts with gross sales. So we would show that, and then any discounts, rebates, allowances, that kind of thing would come off that. But we always want to start with all revenue coming in there. I also, as Kristen mentioned this earlier too, about the 1099 issue and compliance. I think it was an excellent point Kristen brought up about having using tax software to do it. You can also, if you use QuickBooks, you can track it in QuickBooks. And the easiest way to do that is to keep track of them during the year as you pay people, whether the 1099 type payees. And there's a form called a W-9 that needs to be filled out by really anybody that doesn't really necessarily be in your ordinary course of business, like your vendors, but people that come in, maybe that you have someone that cuts your lawn, or someone is working independently in some capacity. Maybe a vendor makes cakes for you, and that and often they're either working by themselves, they're not as sophisticated, they have small businesses and they have to be issued 1099s. The easiest way is to give that person, before you pay them, give that person a W-9 and get the required information to get. And if you do that on an ongoing basis over a 12-month period, you come to the end of the year. And I know Kristen is doing this, you come to the end of the year and in January, you just push a button and those 1099s are generating. So if you're doing your work, it makes it easy compliance with those. Another last point I want to mention on the auto exposure area is to deal with the back taxes and old years that need filing. It does happen. We see it. In some way, the best thing to do is to get organized and get these things up to date. Don't panic. Don't worry about it. I've worked with clients before where they haven't always been doing the return. Something happens, you end up with a medical situation or something other crisis, and you just something doesn't get filed. But it is we can get caught up, and again try to stay up on that. Another thing I'm seeing in this area, good practices or audit exposure. I've had it a couple times this year where clients are organized as an LLC, a partnership. Tax is a partnership. An LLC stands for Limited Liability Corporation, and they often are a single owner. And if they're a single owner with an LLC, tax is a partnership, it's considered what's called a disregarded entity. And those we don't have to file at the corporate or partnership level, but then we take the numbers and we report them on your individual return. I actually like to have a corporation or partnership level at the business level rather than the individual level. It's a better position to have with the IRS. It forces us to get organized and get our accounting all done by the end of the year, and it will all tie out too. So I do encourage anybody that is a single, that they call those single member LLCs, where it's one owner owning an LLC. And our recommendation on that is to form an S corporation and get that corporation return filed. Next slide, please. I like to be proactive about tax planning. We are after the first of the year, but again, it's never too late to meet with your professionals. And it is, I know it's self-serving, but it is a good habit to have quality professionals around you, like attorneys, CPAs, insurance agents, HR personnel, payroll services, that kind of thing. Some of the things that do come up, Illinois has something called the Secure Choice Act, which requires smaller businesses to offer a retirement plan. That's right now, I believe the limit's 20 employees. It's going to be going down to 5 employees at the end of the year. So more or less, they're going to force everybody that has a small business to be offering some kind of retirement plan. It's not necessarily you have to contribute any money to the plan, but it still costs you time and money to administer the plan, and that's where the cost is. The other thing that's been coming up a lot has been the 1099s, which we talked about, but also these capital improvements too, that you're adding equipment or furniture and fixtures, rehabbing or expanding the restaurant. There are some opportunities to expense some of those costs. But that window, it did shrink a little bit in 2023, where we were allowed to expense 100% of it. Now we're allowed to expense 80% of it and write off the rest of it over time. Next slide, please. Some of the relevant credits, the employee retention tax credit. Many of you probably got the PPP loans, and that was a lifesaver to bridge the gap for the restaurants getting through the pandemic. Along with that, there was an employee retention tax credit. It was about a $5,000 credit per employee in 2020, and then in 2021, it was actually $5,000 per employee per quarter. So it was a pretty lucrative credit, and I encourage you that if you have not applied for that, there is still time, and I encourage you to look at that, because you will be able to get the credit on any wages that you were not covered by the PPP. The FICA tip credit, Kristen talked about that. Again, I have seen, and I've seen some pretty good size accounting firms and pretty good sized restaurants that this was not on their tax return, which I really find hard to believe. But it is a tax credit they created really to encourage the employer to report tips on the payroll of the employees. It's definitely a credit you want to take, and one that doesn't want to be mixed. There's also a research and development credit. I don't know if I've seen so much in the restaurant side of this, but there are other, one business that's tied into restaurant or breweries. I often see breweries or brew pubs together. And there is an opportunity anytime you're manufacturing a product or trying to improve a process or a product. So keep it in mind. Other current and future economic issues, as you know, it's 2022 was a challenging year. A lot of times over the last 10, 20 years, we've always had where if labor was going up, commodity costs were going down. If commodity costs were going up, our labor was stable or going down. And this year we really got hit hard by both those numbers, especially in these inflationary times. The food price inflation 2022, there has been some easing lately of that, but with everything going on with the war in Ukraine and the weather and the climate, we're going to keep seeing higher food costs. And the labor costs, again, there has been some relief I've heard in that, but there's definitely wage pressure, and really the whole scale, the restaurants and the wages are moving up. And my understanding is restaurants are still down about 5% from their pre-pandemic levels in terms of staffing. The outlook for 2023, what we're experiencing in 2022 was where food costs went up, labor costs went up, and it was just difficult to get the sales to go up at the same rate. The sales seemed to lag a little bit. The margins were squeezed, and restaurant owners felt that pain because the margin did shrink. The outlook of 23, it seems to be more of the same. There's some easing, but there's a lot of recessionary fears that are out there. But again, what the pandemic has done and some of these tougher times have done is forced restaurant owners to look at their restaurants and look at the structure, look at the underperforming units, try to streamline operations as much as possible, simplify menus, and build up better systems and using technology to make their processes better. So there has been some positives that came out of it, and you are definitely seeing that. And that's really all I've got. I mean, it is, I think, a big question mark 2023, how that's going to be. It's going to be continue to be a challenging times for us. But at the same time, you do see that there are people going out to the restaurants, and it is encouraging because it is an experience that you can't get at home.
Great. Yeah. Thank you both so much. This is super informative. We have a few questions that have come in before this webinar and a few in the chat as well. So we'll get to those. First off, we're going to start with, I know you both kind of touched on ERTC credits, so feel free to jump in here. Are the ERTC tax credits considered taxable?
Yes, they are. They are taxable. It has to be adjusted in the year that they're claimed. So you do, if you are claiming, the right way to do it would be to go back and amend the tax return either in 2020 or 21. But yes, they are taxable.
So you would advise amending your taxes in previous years to better position yourself for ERTC?
It would have to be done just based on the law, where you're allowed to get the employee retention credit for 2020 or 2021, but then the corresponding adjustment to make them taxable has to be done in that year.
Well, the reason the credit, the ERTC credit is a refund basically of your taxes paid. So if you already took the deduction in a prior year and you then get the money, you have to amend the return to show that you got that money. So you're actually reducing a deduction, if that makes any sense.
Yes.
So correct. That's why it's taxable, is because you took a deduction and they gave you the money back. So you have to reduce the deduction. And so you have to amend the return if you've already filed, because it has to tie to the year that it relates to.
That was such an incredibly easy way to explain that. Thank you. As much as it can be easy to explain these things if you're not an expert like both of you. Thank you. So next question we have is, are city and state grants taxable?
Yes,
Yes, and no matter what, always, all the time?
absolutely. Yes.
Okay.
PPP was an exception. That's why there was this big debate in Congress deciding what they were going to do with it. That was an exception. The rule is most things given to you are taxable.
Right, because it's forgiven, yeah. And with just to touch on the state piece, because I know, Dirk, you touched on secure choice. For anyone that has questions about that, please feel free to reach out. We did do a webinar on secure choice in August of last year. It's on our illinoisrestaurants.org website. And further, the employees, if you have 25 or over 15 to 25, that November 1 offering a retirement savings plan is in effect. And as of November 1 of this year, you have 5 to 15 employees that will go into effect. But again, any questions, let us know. And you can go to our website for that webinar and all information. I have a question for, I think, Kristen, you touched on this. For your tipped employees, I get a lot of questions here at the IRA about how to categorize tipped employees, how not to categorize tipped employees and whatnot. Do you have any advice for how you categorize that in general?
Is this about the split between work being tipped or not tipped? Is that what they're referring to?
Mm-hmm. Yeah.
Well, you just have to make sure that you don't have them doing more than 20%, I believe, of non-tippable activities. That's what you do. That's how you have to staff it. If you're going to pay them a tipped wage, then they cannot be required to do more than 20% of non-tippable activities.
Thank you. And then with that, how do you ensure that your employees are claiming they're clearing their tips?
Well, we have a point of sale system. So I know how much they make in credit card tips. And when they check out at the end of the night, they are supposed to declare what they made in cash tips. So basically every checkout, we kind of make sure that it's being done. But the other thing you have to make up or look out for is if they have a slow night. And so they only made so much and that doesn't bring them to minimum wage. So we check that on a per shift basis, and I will pay if it needs to be $10.40 an hour instead of $9.40 an hour to make sure that they got minimum wage with their declared tips. That's an area where I think it's not really taxes, but Illinois Department of Employment Security, you can get in trouble for that. So you need to pay attention to it because you have to make sure that your employees are getting at least minimum wage.
Mm-hmm.
You have to backstop is what I call it. You have to make sure that every shift they're getting minimum wage. Our
Absolutely.
employees, most shifts are getting way over that, but there's occasionally those slow shifts that you have to make the difference.
Right. That's a good point. That a lot of times employees, I'm sure, make more and enjoy that. Follow-up question that we just got in to this topic is employees often ask, how much do I have to declare?
I always say you have to declare what you made. That's what your company line needs to be. That's the rule.
Absolutely.
Now, I'm not going to shake them down and check their pockets, but as a company, you have to tell your employees, declare what you made.
Absolutely. But another question here that is this presentation accessible for download? Yes, to everyone here, or that maybe signed up and didn't attend, you'll get an email with the download and the recording here, and it'll also be on our website later. So look out for that after we wrap up. Dirk, what are the biggest obstacles that you see to signing up for different types of tax credits, whether it be ERTC or other tax credits available?
I would say, again, be a member of the Illinois Restaurant Association where these kind of things are talked about, as well as working with professionals. I know it's self-serving, but it does make you aware of what's going on around there and what's available.
Absolutely. Do you see any tax regulatory changes coming up at the federal or state level that you think will affect restaurants this year, or too early to tell?
I haven't seen anything. I mean, there's nothing particular that I've seen. I mean, there's a lot of energy related credits that are available coming up in 2023. So we're definitely be watching out for those. If anything can be done in that area, but I have not seen anything that threatened anything right now, like the FICA tip credit.
Yeah,
Well,
absolutely. And we'll inform
I'd
everyone.
like to add that it always seems that reduction in the wage we're able to pay tipped employees is constantly under attack. So restaurant owners and even staff who are benefiting from the fact that we do this tip really should fight to keep that, because it's good for basically everyone.
Yes, absolutely. We will keep everyone informed on any regulatory changes coming down the pike from the Restaurant Association and coming forward. Next question we have that came in is, what percentage of your company, Kristen, tips are credit card tips, would you say?
Almost all. It's
Okay.
it's definitely a large amount.
Got it.
Cash is not really, like, we often have to bring money from our bank down to the location in order to pay out our credit card tips, because we don't bring in enough cash like we used to pay out credit card tips.
Oh, wow. We all know it's been trending that way, but I didn't realize that you had to do that extra step now. Wow. And I know also, Kristen, you mentioned that you've been audited 3 times by the IRS. That doesn't sound fun. Was that random? What's that like? Any advice on that? Also from Dirk, if you want to follow up here.
I mean, I'm assuming it was random, but it's also, we're in the restaurant business, and I just feel like they still think that we're kind of all crooks, even though we're not. But, you know, so I think there's just this idea, oh, there's all this cash, and so they must be hiding something. Some of the problem that the IRS does have is that they're still using an old playbook. Like, they kept asking, where are the receipts where you write down what the order is? And obviously we don't do that. It comes to the point of sale system. So they're a little behind the times, and they really only focused on revenue. Like, they went through all of the bank statements, all the deposits. There's hardly any concern for our expenses. They're all revenue audits. But we use a point of sale system and we're legit. So
And one thing I've run into a couple audits with restaurants, and Kristen, I don't know if you had this with the IRS audits you had, but there's a form called 1099-K, which is the amount of credit card, what the credit card companies are going through, what the restaurants doing in credit card receipts is reported on 1099-Ks by the credit card companies. And those don't always agree with your tax return, because there are 2 things in those credit card receipts that are really not revenue. That's sales tax and tips. I mean, those are 2 things that really pass through. I mean, you collect tips and they belong to the employees. You collect sales tax and it belongs to the Illinois Department of Revenue. And those things, and I've had that a couple times, not often, but I'm surprised I don't run into it more. And I know that they're trying to get better with that 1099-K reporting, trying to tie that into these restaurants. But with the way you report, you can do it, but it's really not right to report sales tax and tips as revenue. You have to obviously offset it with an expense below in the expenses, where you'll end up with the same profit. But I'm not, did they ever bother you on that when you had that, when you were going through the audits?
We had Mystic Health, and they did have, they struggled with understanding that.
Right.
But I mean, you explained it a million times and they finally get it.
Right. Yeah, they don't understand it themselves.
But with a point of sale system, that does kind of help you, because it's easy peasy to show, here's the sales, here's the tips, and then you say, okay, now back out from this, the sales taxes on those sales, and here's the number. Right.
And then, if you're doing right like you are, that those numbers will hit to the penny.
Mm-hmm. Now, with this is kind of a specific question for Derek as a follow-up on LLCs. So if someone has multiple LLCs or multiple limited partners, is there any alternative when it comes to ERTC credits, since that would mean that if they have multiple, then all of those investors would have to file a return, amended return?
Yeah, right. It would. It can get messy. You're right. There's no doubt about that.
Okay.
But I would say,
is there any alternative?
I don't. Not that's right. I mean,
but if you're getting money for free, it might be worth it. That's all I'd say. Look into how much you're going to be able to get, and it might be worth doing the amended. It'd be an amended K1, and they just have to do an amendment.
Right. Which goes pretty quick.
Okay. If you're just an upstart, is there here's the next question. How would you go about finding a CPA to do taxes for a small restaurant? I mean, obviously we have Dirk here.
Dirk would say hire him.
Yeah. Call me first.
Yeah. And you do
Uh,
specialize, yeah.
I do. Yeah, find someone that knows your business. I think that's important.
I've also had some questions from other members come in about getting rebates from big equipment things, especially energy efficiency things. Dirk, do you have any information about that front, or is that still in the works?
Some of that's coming up. I'd
Okay.
say we haven't gotten that much into it because a lot of that applies to 2023, but there are
Mhm.
definitely opportunities, just I mentioned, there are a lot of energy related items that could be there could be credits that'll be out there. And it gets more, what happens to these manufacturers too, that make this equipment, they know about those credits too. So they're usually talking about them, trying to encourage you to buy their equipment.
Absolutely. Now, Chris, I know you talked about 1099s. How do you typically deliver those to your employees? Do you mail them or just
Well,
give
I
them to them in
don't,
person?
1099s are for contractors, not employees.
Yeah.
So I usually, when I get the W-9, I ask for an email. So I
Mhm.
actually usually email and mail the 1099s just as a backup.
Mhm. Okay. Is that a requirement, or is that just a practice you do?
The requirement is to have them mailed by, I think, January 31st.
Got it. Are there any common things that, Kristen, you may have missed initially? I know you've been in a while, or Dirk, you find in your clients where restaurants operators, they miss something in their taxes, such as credits or reporting?
I mean, obviously, like I said, the FICA tip credit's something you don't want to miss. I haven't seen it with other accounting firms preparing it. I mean, I'd say that's a big one. And then just make sure you get all the credits you can. I mean, that's a big one. And then make sure you get every deduction possible and keeping a good set of books. That's really, and that's how you'll make sure you get everything.
All right. Don't see any other questions here. So we can start to wrap up. And we appreciate everyone attending today. Most importantly, we appreciate Kristen Vaughn here, Vaughn Hospitality, joining us in her expertise, as well as Dirk Albeck at Apple Partners Growth for providing such important insight. We all have to file taxes here, and restaurants are particularly being audited, and they have different needs than different restaurants in general. So we appreciate your time today, both of you. And to everyone attending, you will get a recording and an email follow-up of this, of all of this webinar, as well as the slide deck. So please be on the lookout for that. If you have any questions going further, please know that myself at the IRA in general, as well as the Cook County Small Business Source, remains a resource for information, any one-on-one business advising that you may need. And we look forward to hosting more of these. And thank you, Kristen and Dirk.
Thank you. Appreciate
Thanks,
it.
everyone. Have a good day.